What is up, YouTube? Guess who's back? Every Trading is back to back with another live stream. Today, market commentary over market live price action. Thank you, as always. So this is the lay of the land. As far as the 1 minute charts, yes, I would say let's dive right into the daily chart real quick and have a high time frame analysis. So if we catch up with what I said in yesterday's live stream, I pretty much told you guys that we are bullish, at least on the high time frame. Long term, we have relatively equal highs. Okay, so high time frame bias is bullish, but seems like we are going to witness a deeper retracement. Where can a deeper retracement go back down into? As we can see, breaker, fair value gap, inversion fair value gap as well in here. But I would like to see price stay inside of this order block in here. Okay, it can go lower. We have a huge displacement in here. Okay, so we might as well see a deeper retracement back down into this fair value gap and this inversion fair value gap. Okay, so I mean, we have a huge volume balance in here. I don't want to say that price is driving back down into it because, yeah, like I said, high time frame bias is bullish. But yeah, I mean, it's permissible for price to trade back down into this fair value gap again and this order block. So far, price has been respecting this order block opening price. Okay, so let's see what we can get. High time frame, intraday time frame. If we look at the 1 hour chart, we had 2 down close candles yesterday, and the day before yesterday was pretty much bearish. So I wanna stick to the trend, which is a bearish. We have bearish intraday order flow. Okay, so I want to see a buy side raid and another run lower down into this low and this inversion fair value gap. Maybe I don't know, maybe, but we have these relatively equal lows down here. As far as the market makeup sell model is concerned, we had original consolidation in here, smart money reversal, low risk sell, first stage distribution, second stage redistribution, and sell side taken. Okay, so one could argue, okay, yeah, we've taken our sell side, so we're going higher now. Yeah, we already did. Okay, so we had this huge up close candle during pre-market, but I don't think that this is the end of this run lower. We might see another run. I mean, it's difficult. We are at a fulcrum point, so we could go either direction now. Okay, so we could use this to retrace and then go lower, or to completely reverse. Okay, and since I'm not the one who's trying to pick the bottom in an intraday bearish market, I'm bearish and I'm sticking to an intraday bearish bias, even though high time frame bias is bullish. Okay, you gotta weigh everything out and also consider later on Trump is speaking and we have FOMC. Okay, so it's not looking too great, but yeah, we'll see. We will see. But yeah, as you can see, high time frame intraday time frame is kind of contradicting. High time frame bias is bullish, intraday bias is bearish. So it's not higher probability. So best case scenario would be looking for a setup that is in alignment with the high time frame bias. So if intraday bias turns out to be bullish and is in agreement with the high time frame bias, which is also bullish, then we can take a good amount of risk, not too much, still in the realms of realistic. Okay, and take a nice trade. So I mean, yeah, we'll see. You can also trade independent on the high time frame bias, and you can just trade intraday liquidity. So yeah, can look at the 5-minute chart right now, or even, yeah. Okay, on the 5-minute chart, as we can see, we had relatively equal highs in here. We had relatively equal highs in here, and we took them in London. Had a deep retracement, went higher. Okay, now we left relatively equal lows down here, and we left relatively equal highs. So what are we doing? We are waiting for one side to get swept, either buy side or sell side, and then aim for the opposite pool of liquidity. That's a plan, okay, and that's what we're gonna do today. So relatively equal lows, relatively equal highs. Okay, so that's daily fair value gap. Let's turn it off. We have sell side, we have buy side. Wait, let me check if we can actually see. No. Now that should be perfect. Okay. Nice. Yeah. So I would say we're going to wait. Sit still for the first 30 minutes and see. We want to be done by 10:30 actually, because later on FOMC, and whenever there's FOMC, I mean meeting minutes, to be honest, is not too volatile. That's not the actual FOMC high impact news driver, but yeah. Okay, so this is blue. This is red. Yeah, okay, perfect. Sell side. Okay. That's the lay of the land. Okay. So far we are right in between the range. So you want to see a breakout or a sweep of one side or the other. And that will tell us if we are bullish or bearish. First present for value gap actually has not formed yet. This is many times indicative for manipulation. Okay, so 830 low taken. Now let's see if we can get down to sell side. What you can do is take that sell side in here, create the range from this sell side to this sell side, and then see where the midpoint is. If we can close below the midpoint, that's indicative for further bearishness continuation down into sell side. Okay. Okay, perfect. Sell side taken. Sell side taken. Let's see. Let's see, let's see. How far can it go lower? Rate this range. Pre-market section high to low. And use this one. Oh, that was the wrong one. This one, this one. So there's a daily inversion for Vertigo that I was talking about in the beginning. Okay, this doesn't seem to be manipulation. So seems like it wants to continue the rally down lower, continuing bearish order flow. And dig deeper on the daily chart. Gotta stay patient. Okay, come back up. Let's have a look at the 1 hour chart. This is the 1 hour fair value gap that I was talking about yesterday in yesterday's live stream. And look how beautifully we traded up into it in here and respected it. Okay, so I mean, it is confirming bearish order flow. Try to rally up once more. Fade to trade up into 1 hour fair value gap. And then 9:30 opening did not even came back above this high. Used this fair value gap and went down lower. Okay. Orange is the daily inversion fair value gap. Let's see. Go to weekly chart real quick. So this is what the weekly chart looks like. Okay, we have a huge order block in here. Why is this an order block? Because we have 3 consecutive down close candles that are manipulating sell side, trading down into fair value gap. And as you can see, this is the low. Okay. The bodies, whoops, the bodies did not even go below it, okay, and we only wick lower, so this is the bullish sign. And we had this huge displacement higher, trading to through this candlestick's opening price. So this is validated as an order block by trading down through this opening price. This is validating this as an order block. So prices now went above it and trade back down into this order block and also into this weekly fair value gap. Okay, and if it wants to go higher and climb higher, continuing higher, it should respect this daily orange inversion fair value gap and stay in the upper half of this weekly fair value gap here. Okay, so it should stay above this dotted red line, and this is the upper half of the day, a weekly fair value gap, and it should find support inside of this daily fair value gap. Okay, so if we have a close below this inversion fair value gap, that yeah, will warrant a deeper retracement even down into this volume imbalance. But we don't want to concern ourselves with this volume imbalance right here, as long as we are closing above this inversion fair value gap. Okay, so We want to stay above this week's midpoint, and above this daily fair value inversion fair value gaps midpoint, and the weekly fair value gap midpoint. Okay, so we should find discount sensitivity down in here and then climb higher. That would bode well for continuation higher. Like I said, if we close below this week's midpoint and this inversion fair value gaps low, if we can close below it, that would not bode too well for continuation higher. Yes, we have a break in here, so technically it would be permissible for price to stay inside this whole range. But what do we want to see if we are bullish? We want to see price to fail to trade down into a discount array, which this breaker is. Okay, so this is a breaker. We traded down into it once, and this is actually enough. Okay, yeah, it's reasonable to see another retracement, but it should reject higher quickly if it wants to continue higher. So let's see. Lots of if-then statements. It's difficult, I know, to follow, but it's not complicated. Okay, it's just if this, then that. Okay, so what is this? Yeah, that's a weekly fair value gap upper quadrant. Let's take it off. Back to 1 minute chart. I'm doing nothing. I'm sitting still, waiting for my setup. So pay attention to the Discord. Yeah, if you want to join my Discord, it's completely for free. Link is in the YouTube biography. Bio. Yeah, it's in the bio. And yeah, I was going to say Forex Factory, not Discord. So let's have a look at the economic calendar, and let's refresh the page for a second. Yeah, okay. So President Trump speaks at 2:30, and 2 p.m. is FOMC meeting minutes, and tomorrow 8:30 is Philly Fed Manufacturing Index. So I don't trust whenever a Fed news data comes out. This is normally indicative for, yeah, a little bit more difficult price action. So what NQ is trading lower, taking out pre-market sell side, S&P 500 and Dow are actually moving to the upside. So if you can look at MES for a second and Dow, this is Dow. So Dow is accumulating lots of sell side in here. This is most likely going to be taken out, and so Dow is bullish for now, as well as yes, but yeah, yes also have these relatively good lows that I'm not sure 100%. You are not. There's nothing guaranteed in this market, but yeah, it's pretty obvious down in here. And yeah, seems like NQ is the leader. Oh, Seems like NQ is the leader on to the downside. So I mean, I would have preferred price to open at 930 and then manipulate higher, take out buy side, and then move lower and we catch it short. But yeah, obviously this didn't happen. So yeah, we gotta wait and see. To be honest, we already met the target on the downside. We took out sell side. And it's kind of refusing to go lower right now. And we fell short of the daily inversion for Valium, so we didn't touch it. And looking at on the 5-minute chart, we could not even close near this standard deviation level from this range. So it's not easy. You gotta weigh out lots of things. And for a beginner trader, it's definitely not easy. And I mean, I'm trading now for 2 years and I'm still not there yet. Okay, so I'm still, I would say, I would consider myself still a beginner even after 2 years. Okay, so first one for value gaps down here. So I don't want to take a short. We are too far in a discount. We traveled too much towards downside. Already took out sell side. So shorting from here is not optimal. And trying to catch a long. touched first spin for value gap, created a wick, and then got rejected off of the wick's midpoint. Okay, so far it's respecting bearish PD arrays. So we tape read this thing and see how far it wants to go lower. And yes sir. Okay, moving lower, like I said, targets are these 7 to 9 AM standard deviation levels, 0 0.5, 0 0.25, 0 0.5. Let me just, yeah, turn on the levels. So touched the 0 0.5 level. Bro, someone off my Discord members just took a trade in his car on his phone, and he took the short from here lower. See how it's respecting the 0.5 level. Beautiful. Beautifully using the standard deviation levels. I definitely got to come up with a trend with the trending model, because recently, yeah, we don't really see reversal patterns, do we? I mean, look at this 930 opening. We didn't get the manipulation high to catch the reversals market maker sell model to the downside. Okay, so it's trending lower, and we gotta, yeah, come up with a model that is yeah, good for trending environment. So inversion of a value gap. Look at this reaction, bro. This is insane. So we might see market maker buy model. We might. So took out London. London lows. Hmm. So this is not I'm drawing out this trade, but this is against intraday auto flow. So we have intraday or intra-session bearish order flow and trying to predict the low on, yeah, basically the last 2 to 3 days that were bearish down closing candles. I mean, you're burning yourself trying to pick the bottom in a bearish market. Yeah, high time frame we are bullish, blah 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 blah, but intraday it's definitely not bullish. So I'm hesitating with taking this trade. It's not from midnight, and yeah, that would be me trying to pick the bottom in intraday bearish market, which I don't want to do. Okay, so this is why um I don't take this trade. Yeah. Yeah, it seems like it's been the right decision not to take the trade and listen to my experience. Uh difficult, man. It's freaking difficult. Hey bro, I'm live. Ja. Achso. Ja, ich call dich danach. Ciao, ciao. Bro's calling me. Ah. Ah. Yeah. Okay. So we've been respecting this all blocks midpoint. What is good, YouTube? We have 3 viewers. What's up, folks? So, down here, I was drawing out this long, but I was not taking it because, yeah, as you can see, we have intraday bearish order flow, and these are the standard deviation levels. 7 to 9 a.m. Okay, this green box is 7 a.m. to 9 a.m. High to low. Rate the range, put standard deviation levels on it, and you get this point in here. Okay, see how price reversed from here. Okay, and we've taken out London low. Okay, we've taken out sell side twice in respect to the standard deviation level and the daily inversion fair value gap here. So that's why I was drawing out this long from here. But yeah, I don't want to take these trades, even though, yeah, it's a valid trade idea, but yeah, we've been trading lower, 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 and I don't want to try to pick the bottom in a bearish market. Okay, that's why I didn't take this long. But yeah, seems like it kind of delivers. So target is first presented fair value gap midpoint, which gives us a 2.1 R hypothetical trade. I mean, look at this price action, bro. You don't want to you don't want to try to pick the very bottom, the lowest tick, and take that long, bro. You don't want to do that. Okay, even though this trade might turn to be profitable, but yeah, out of 10 times you will get burned 9 out of 10 times. Okay, this might be the one trade that pans out, but normally you would get smoked. And I used to take these trades and get smoked and burn myself. So I learned from the lesson. Maybe some years down the line with more experience you can take these trades with reasonable risk management and try it. But yeah, after 2 years of trading experience, I learned my lesson and I'm not touching these trades for at least another 2 to 3 years. But yeah, I'm outlining you the logic, and it pans out. So 7 to 9 a.m. high to low, standard deviation level 0.5. Respected it. Reversed from there, came back down into order block, respect midpoint. Okay. So it breached one discount array by trading below this potential inversion Favali gap. So this was the last PD array that was protecting my stop loss, which is an order block. So we respected it, reversed from the midpoint, and now we are almost back inside the first percent Favali gap. Now we are creating relatively equal lows down here. So what would be reasonable to take a trade on would be waiting for retracement back up into first percent Favali gap, which is also in the vicinity where the midnight 12 a.m. opening prices, and then wait for a market structure shift and then a short setup trying to aim for these relatively equal lows and a further deeper retracement into the daily Favali gap. So there might be a potential setup coming right now. Okay, so let's turn off and delete this one. Let's observe the midpoint of the first Favali gap. But touching the low of it, that's actually enough. Or maybe this high, but the midpoint is not actually necessary. So trade back up to old sell side liquidity. So we want to look for a short. Let's see. Come on, give me a deeper retracement into the first Favali gap and take out this high. No, guys, it's a lot on the charts right now. Let's take this off. by side. So taking this potential long from down in here, the by side, that would be enough. Low hanging fruit objective for the long. Actually, first percent favori gap low would be low hanging fruit. See how price is actually reacting off of it. But yeah, we have buy side. Bro, there's a fly just flying around in front of my face. It's making me mad. Come on, bro. I don't see it. I don't know. So this is enough. It actually doesn't need to take out buy side, but since buy side is in close proximity to it, and always I want to see some kind of liquidity pool taken before I take a trade. So I'm waiting for this buy side to be traded down, to be traded up into. Come on, bro! I didn't get it. She's too fast. Fucking fly. Yep. Bro, I'm looking stupid in front of the camera trying to catch fly. Looking like an idiot. Yeah, okay. Buy side taken, perfect. First presented for value gap. Now, if it wants to go lower, it should stay preferably in the lower half on a closing basis. It can wake up, but it should stay in the lower half. Then I want to see displacement below the first for value gap, urge for value gap, and that would be a trade that I would take. Come on, boy. No need to trade high, boy. So first hour of training is done. So what you can do now is grade the range from high to low. So now we came back up into the premium. See, the midpoint of 9:30 to 10:30, high to low. Is here. There's the equilibrium. Okay, so we traded up into this into a premium. So now we should see price going lower. Ah. My dad just called me. So if it gives me a displacement lower below this inversion fair value gap, then I'm going to take the short. It's waiting for time, so it's 45. We are waiting for 10:50. So yeah, still waiting for that short. It has not given me the trigger yet. I mean, one could short it inside of this auto block. Bro, I don't like these relatively cool highs. Bro, it's not giving me the trigger. I wanted to see at least a closure below the midpoint, but preferably a closure below this orange shaded potential inversion fair value gap. I mean, it looks like a fake bull flag. So it looks like it wants to dive. We're inside the macro. It looks like it wants to dump heavy. One more run higher and then market structure shift. That would be beautiful. Yeah. Sweet buy side, perfect. Come back down into the first percent fair value gap on a closing basis. That would be optimal. Yeah. Okay. Okay, boy. It's not been giving me the trigger, so I didn't take a trade. So I didn't take a losing trade. We avoided a losing trade right there, but man, it is so demanding of patience. It's insane. Give me a clear market structure shift now. Come on, boy. Come on, dog. It just doesn't want to give it to me, boy. It is what it is. Come on, displacement lower. Give me an entry before 11 a.m. Insane. Oh, this goddamn fly is still alive. It's making me mad, bro. Come on. Yeah. So, I mean, 11 a.m. is in 2 minutes. So New York session is done. So, what you can expect? Seems like we get a delayed protraction. That means that, yeah, I think we are going to run these relatively close later on. So it seems like a lunge, a macro retracement into everybody who's been profitable on the shorts, stopping everybody out who's been short, and then go lower towards 12:30, 1:30 to 4 p.m. Okay, boys, I think that's it for today. I hope you guys enjoyed the live stream. Didn't get a trade today. Yeah, August has been pretty difficult for me so far, so we don't give up. We don't give up. Just preserve capital, get through tough times, and yeah, sit through the pain, stay patient, and I would say I'll catch you guys tomorrow in tomorrow's 9:30 a.m. live stream. So, hope I see you guys tomorrow. Be safe, Lord willing. See each other tomorrow.